Hey traders, what's going on? Todd here, Trading Analysis. Listen, we put out a Nasdaq longer term video of the Elliott Wave counts, which a lot of good feedback. Thanks for that. It was great. So there's two scenarios we're looking at, and again, I wish I had a crystal ball to tell you exactly which one is going to play out, because on the other end of that would be millions and billions of dollars of profit, right? Well, based on the more conservative count, the blue count, if you remember from the video, we just made a move in the market and put a hedge on. Okay, so I'm not going to go back over all the long-term analysis. Be sure to go back and review that video, the previous video. But that one considers the move up from October of 22 as a pending 5-wave completed move. Okay, so it's in green, and that's the minor degree, and then each trend wave 1, 3, and 5 would be comprised of 5 smaller minute waves. Okay, that's not minute, that's minute. All right, so here's the weekly, and then we're going to get inside of minor 5 weekly down to the daily and bring in one small degree of wave counts, and here you go. So within minor 5, it's possible we are right smack dab in the middle. This is the long-term resistance that I looked at. It's possible that we are right in the middle of the resistance zone, and it's time for a pullback. Okay, so we just put a hedge on, and I'm going to show you how we calculated the hedge and the reasons for it, et cetera, et cetera. So there's a lot of fib resistance up here, and that's coming from, calculations based on the length of prior trends and corrective waves to figure out where resistance may be. Okay, so daily, I'll even give you one smaller degree. We'll go one half-day chart, which is a 195-minute chart, and even inside of 5 of 5, you can see 5 smaller waves. Okay, little green guys here. So yeah, we have 3 degrees of possible completed 5-wave moves. So is a correction upon us? Maybe. Okay, maybe. I am looking at something significantly more bullish, and I hope I'm wrong. Okay, but I have to look at this scenario. And if we look at the Qs, I did it in the Qs, and I'm going to show you how and why we structure the hedge as such. So this is the daily, and we're just looking at the move up from April, and it looks to be as a 5-wave move. We have a clustering of fib resistance right here, and wondering if we're going to get the 3-wave move down into a 38% retracement, 50, 618. This is all typical. Okay, so the way I look at this is from current levels in the Qs, we have until we start to move to the first downside corrective support objective, 5.1% move at the 38% retracement, half back would be 6.9, and then a 61% retracement would be 8.7%. So you're talking a 5 to 8% drop. Okay. We hold and manage a very active stock portfolio with our members at Trading Analysis, which, by the way, we are launching in my wealth management business inside Edge Capital. So I'm going to be managing that live within the Trading Analysis members area. Really cool. Okay, so we have a very active stock portfolio that we just put a hedge on based on this analysis. So let's call it a 7% decline. And if we look at price and time objectives, the middle of July is between a 38 and 61% time retracement, as is in the keys 457 to 439. There's going to be the 38% to 61% pullback. So this highlighted box is a pretty conservative textbook downside target. Okay, so we're holding collectively $165,000 of positions, right? And if the market is looking at a possible 7% decline here in the Nasdaq, 7% of 165 would be $11,000 drawdown. And there's no guarantee that, our positions are going to go down the same amount as the index, right? It'll probably go down a little bit more because we're holding some pretty high octane, high growth, high beta stocks. So we probably face, a $12,000, $13,000, $14,000, $15,000 drawdown. So knowing that, knowing where we think corrective support is in price and time, here's what we did. So there's a look at some of our positions. And if we look at the Qs, here's the actual hedge we put on. And this is a live position. So I did the 470, 450 put spread. Now, trying to get down into 470, as close to 450 as we can, that'd be max profit. And where's the 450? Of course, it's right here at the 50% retracement, right? So we're just trying to get from 470 down into the 50% pullback, which would be into the area of the prior fourth. And we did it at the July monthly expirations, which is the 19th, which is right here. So specifically, if we could get right here in price and time, that would be a perfect hedge. 50% retracement on July 19th. And that's why, we did the 19 July. So the total risk on the trade on that put spread is $2,700. So as a percent of 165, $165,000 in notional positions, right? 1% would be $1,600, right? So what do we have? 1.6% risk as a percent of our total outstanding positions. So if we lose everything on this hedge, it's down $2,700, which would be right there. But if we're anywhere below 450, right here, max potential profit 17,300. Remember, we're trying to hedge a possible 11 to 12 to $15,000 drawdown, maybe 16, 17,000. So that's the way we're going to risk, 1.7% of our notional outstanding to hedge a good amount of potential pullback in following a 5-wave move based on everything we've talked about over the last 2 videos. And hopefully I'm wrong and this blue count is incorrect and this is just nothing more than a pullback in the very beginning of summer, longest day of the year. No real new information. We know there's weak data out there. Economy's slowing a bit. There's a bifurcated economy. Consumer discretionary stocks have been very range bound, not going anywhere. Where tech and AI is clearly leading and crushing. There's nothing new in interest rates. Once, maybe twice. Maybe we get our first cut in September, but probably in November. We got to wait for Q2 earnings. It's a quiet market. So they say don't sell a dull market. Hopefully I'm wrong and this thing rips to the top side and I can take off my hedge at a small loss and we still have our positions on. So anyways, hope that helps. All right. See you guys in the next video update.